All right, let's talk about THG. This is a global e-commerce giant that has just gone through a massive company-altering strategic shift. So in this explainer, we're going to dig right into their latest earnings report to really understand the story of their big 2025 comeback. We'll break down what happened, how they pulled it off, and, what it all means for what's next. Let's get into it. If you've ever used Myprotein supplements or maybe bought some skincare from Look Fantastic, then yeah, you're a THG customer. But behind these huge consumer brands, there's a really fascinating story of corporate transformation. And this past year, 2025, it was a true make or break moment for the entire company. So the word of the year for THG was transformation. It really was. After spinning off Ingenuity, that was their tech platform that powered other e-commerce sites, the company had to completely reshape itself. The goal was to create a leaner, much more focused business. And hey, don't just take my word for it. The company's own CFO, Damian Sanders, he framed the entire year this way. The goal wasn't just to stay afloat, it was to become way more agile and really set the stage for generating some serious cash in the future. So what does this new focused THG actually look like? Well, it pretty much boils down to two core pillars. You've got THG Beauty, that includes massive online retailers like Look Fantastic and Cult Beauty. And that makes up about 65% of the business. The other 35%? That comes from THG Nutrition, which is led by the absolute powerhouse brand Myprotein. So, after this huge transformational year, what was the big headline number? A 2.3% increase in full-year revenue. Now, I know what you're thinking. On the surface, that might not sound all that explosive, but the story behind that number is what's so compelling. See, this growth was entirely driven by a really powerful recovery in the second half of the year, which proved their new strategy was already starting to work. Okay, so let's dig into that first pillar, the beauty division. This was the undisputed star of the show in 2025. It staged just an incredible comeback after what was a really, really challenging start to the year. This was a classic tale of two halves, no doubt about it. In the first part of the year, TH Beauty actually pulled back on purpose from less profitable sales so they could invest in their own brands. And yeah, that created a drag on revenue. But the second half, the business just roared back to life, showing real growth and some seriously powerful sales momentum. So how'd they do it? Well, they got laser-focused with a sharp, three-pronged strategy. First, they stopped chasing every single sale and instead honed in on higher-value customers, the ones who would come back again and again. Second, they doubled down on their most profitable home markets, the UK and the US. And third, they went all in on social commerce. And the results of all that focus? Get this. During the supercritical cyber trading period, their flagship brand Look Fantastic saw sales jump by an incredible 16.2%. That is the kind of number that just proves the strategy was hitting the bullseye. And that bet on social commerce, it paid off big time. They became the #1 beauty retailer on TikTok Shop in the UK. Think about that. Their creator network produced over 90,000 pieces of content, which generated a staggering 200 million impressions. This isn't just marketing, folks. This is how you build a modern, digital-first powerhouse. All right, let's switch gears, because while the beauty division was staging this big comeback, the other half of the business, THG Nutrition, was fighting a totally different kind of battle against some major global headwinds. The CFO laid out the problem pretty clearly. The price of whey protein, which is their key ingredient, was at a record high. At the exact same time, the weak Japanese yen was just hammering their margins in a really important market. So this was an external challenge, right? Not a fundamental problem with the brand itself. So what was the game plan? They couldn't control the price of whey, so they got smart. They focused on what they could control. That went strategically buying to lock in supply, diversifying into other products like activewear, staying super disciplined on their pricing, and massively expanding their retail partnerships. And that retail expansion strategy, it's been an absolute game changer. Listen to this. In 2025, over 43 million licensed Myprotein products were sold in physical retail stores. That's 43 million new touchpoints with customers who maybe had never even been to their website. That's how you dramatically expand brand awareness. Okay, so we've seen the story of the two divisions, but behind the scenes, THG was also doing some really crucial financial housekeeping to build a much stronger foundation for all this future growth. A key part of that was a major debt refinancing. Now, I know that can sound kind of complicated, but it's basically just like refinancing the mortgage on your house to get a better deal. You're just extending the repayment timeline and getting better terms, which gives the whole business a lot more breathing room. And for THG, it was a huge success. They pushed their debt deadlines all the way out to 2029 and seriously reduced their overall debt. They ended the year with a solid £333 million in liquidity, which is just readily available cash. What this means is they now have the financial stability and the flexibility to actually execute on their long-term plans. And here's a little wild card for the future. So because of a recent legal ruling on how value-added tax applies to protein powders, THG has submitted a claim, a retrospective one. If it's successful, it could mean a cash injection of over £60 million. Definitely something to keep an eye on. Okay, so we've covered the transformation, we've covered the beauty comeback, the nutrition challenge, and the big financial fix. So let's bring it all together and take a look at where THG is headed next. The company's official outlook for 2026, it's optimistic, but it's grounded in reality. They're forecasting solid revenue growth, and they expect their margins to improve as those whey price pressures finally start to ease up. And most importantly, they're targeting positive free cash flow. In simple terms, that just means after all the bills are paid and investments are made, they expect to have actual cash left over. So where does this all leave us? THG has successfully navigated a year of massive transformation. They've refocused the business, they've strengthened the balance sheet, and they've returned to growth. The big question now is, can this new, leaner version of the company prove that its comeback isn't just a one-year story, but actually the start of sustainable, long-term growth? That's what everyone is going to be watching for.